Hey, what's up? So in this video, I'm going to go over my $15,000 US stock portfolio, but just quickly before I do that, let me paint the landscape. I live in New Zealand. I've been interested in getting into the US stock market for a while now, but the options available to do so from New Zealand were not very appealing for small-sized accounts, and so I never did. That was until I discovered a new company or platform at the start of last year called Hatch, which provides competitive brokerage fees and makes investing in the US stock market much more straightforward for New Zealanders. And now, without further ado, let's break down my portfolio. As you can see, I've currently got $15,878 invested. In fact, I've really only got $13,000 invested because the portfolio has already grown 18% this last year. And I attribute most of that growth to the volatility of the market. I think 2020 in particular, with the way the market has been a great opportunity for new investors. All right, let's go through the list. So my biggest holding is currently AT&T with $3,237 invested. And simply put, the main reason is because I think telecommunication plays a huge role in society. They have a decent dividend yield, and they're also a dividend aristocrat, which basically means they've paid dividends for at least the last 25 years. And not only that, but the payout amount has increased annually also. Next on my list is ExxonMobil with $3,007 invested. And I chose this one because I think energy and petrol are underrated right now, with the media highlighting companies that are starting to focus on clean energy. For example, I think electric cars are great, and Tesla's one of the companies I definitely should have bought into back in March, but when you only have so much you can invest, you can't pick them all. Anyways, so I think clean energy will eventually become more prevalent, but until then, a lot of people still drive gas-powered cars, like a significant amount more. And cars are not something you just upgrade every day. Boats and planes are also mostly fueled by gas. So I think at least for the next few years, petrol will still be a valuable commodity, and because it's cyclical with a decent dividend yield, this is why I bought ExxonMobil stock. Coming in at third is Simon Property Group with $1,446 invested, and I bought this because I think property in general has a good history of appreciating in value. They have a good dividend yield, and I think malls, despite the pandemic, despite the rise in e-commerce, will still have a part in our lives. Next, we have United States Oil Fund at number 4 with $1,030 invested. And this was just me continuing to bank on petrol as a recovery stock, but diversifying within the sector. They don't actually have a dividend yield, but I think there is potential for the stock to reclaim its 2019 highs. Now from here downwards, the rest of my stock picks have less invested, and a lot of the reasons why I bought them are quite simple. So the next stock I have in my portfolio is Macy's at number 5, and I didn't put a lot of money into them just because I was skeptical, but they've done surprisingly well, and it validates the reason why I bought them in the first place, which was because I thought they were undervalued and they had an okay dividend yield. Then I have Hewlett-Packard stocks at number 6, and while I think the company has sort of lost its place amongst its competitors, I do think there are some areas where they are still doing well, and the fact that they still have a reputable brand name leads me to believe the stock was undervalued. They also have an okay dividend yield. After HP, I have Magellan Midstream Partners at number 7. And basically, I just thought the company had a good dividend yield along with a good history of paying dividends. At number 8, I have American Airlines. And I basically just bought this when the stock values seemed to be going up every day, just to see where I could take it. But it's also a recovery play. And as I don't think planes are going anywhere anytime soon, I think they are big enough as a company to recover, and they do have dividends, albeit small. The 9th highest holding in my portfolio is Wells Fargo, and I simply bought them because I've heard about the company enough times, and they actually have an okay dividend yield. The 10th highest holding in my portfolio is Royal Dutch Shell Class B, and this was just me diversifying my investments in petrol. At 11, I have Invesco, and I bought this because I thought it was undervalued. I thought there was a decent dividend yield, but I wouldn't have been able to predict that it would bounce back so quick. Then I have Carnival Corp at number 12, which is basically a recovery play. At 13, I have Shell Midstream Partners LP Holding, and without overthinking it, it's had positive financial statements the last few years. The dividend yield seemed good, and along with my other petrol stocks, I think this can recover its lost value. The last one of the list is Visa, and this was an interesting one for me because the dividend yield isn't particularly high, but I think this has potential to go up in valuation in the long run. And so it's kind of just me planting a seed, something a little different to see if it will grow and perhaps outperform some of the dividend stocks. And that's it. I know this wasn't a very technical analysis of my stock portfolio, but I just wanted to share what one person is doing. Maybe you'll agree with some of my picks, maybe you won't. Bear in mind, I'm not a professional investor or a financial advisor. I'm just a guy trying to make a little extra money and learn some things along the way. Thanks for watching.